Welcome to the channel, guys. My name is Jess. So it has been a pretty volatile last couple of days of price action from Bitcoin, with the price going all the way up to 64k before crashing back down to 62k support. The charts have flipped pretty bearish on the short time and pushing us into a further red October. So let's dive into the charts today to talk about exactly what we need for a bullish reversal here and targets on both the short time frame and higher time frame charts. We'll also talk about the key levels of support that we have to watch out for a potential further correction. Before we get into all that though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram, and if you're looking for my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. Alrighty guys, so diving around to the charts today, let's start off by talking about our most recent weekly candle close, because a lot of the, bearish warnings or bearish signals that we're getting from the charts, a lot of them do originate from the context that we can get from that recent weekly candle close. So in my last video, I spoke about how Bitcoin really needed to clear above this level here, the prior opening price for the prior week at 63,500, but unfortunately we were not able to do that, and the price closed around 62,700 and formed a bearish engulfing candle here. So as you guys can guess, a bearish engulfing candle is bearish, but it essentially tells us that the bearish strength, or the strength of the sellers approaching this level of resistance here from $68,000 to $69,000 was stronger than the bullish strength that we had in the week prior approaching that level of resistance. And so we have a higher probability now in this following week over here of printing and closing a red candle as opposed to a green candle. So we've already started to see a little bit of that. We did start off quite bullish for the week there, going all the way up to 64k, but ultimately we have fallen back below that opening price there and are currently sitting around $62,000. Now in the last 3 times we have retested the upper ranges of resistance that exist within that upper half of our descending channel structure over here. We have formed bearish engulfing candles, this one following a death star cross, that have ultimately led to range low retests over here. And so while there is a lot more that needs to be seen before we can confidently say that we are going to retest a range low, this next coming week of price action then is actually very, very important. And this next period of, more bearish price action is really important, because if we go on to retest the range low once again, that is the first time where we're retesting the range low while also falling below and into the Ichimoku cloud here on the weekly. Now that means we've fallen below the leading span A support, which is what established a bounce on the last range low retest, and suggests that we are going down to retest the leading span B, which again has historically acted as a level of support, where if we fall below, we enter a bear market. We have confirmation from that also from the sell side liquidity level over here at 49,000, where we lose our descending channel structure. So we failed to break out, rejected downwards, and entered that high time frame bearish continuation. So obviously that's really, really far away, but what we need to know now is approaching this level of support here at the midline of our macro structure. What can we look for to signal a bounce, and what is going to be the very first warning signs surrounding these levels of support within that sort of midline that we're going to see a further bearish continuation? So let's dive into our short time frame charts and talk about all that. Before we get into the rest of the video, guys, let's hear a quick word from our sponsor, BTC. We can get 15% off all of your trading fees and up to $5,500 in sign-up rewards when you create your free account using the link down in my description box. BTC is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Alright guys, so diving into the hourly chart here, let's talk about the short time frame, and let's start off by talking about what we need for a bullish continuation, because I think it is the most simple of all the scenarios here. So on the short time frame here, I know it looks really, really choppy and really, really messy, but essentially all we need to know is that this is the current relevant trading range right now on the short time frame. So it ends up here at $64,000. That is our key level of resistance here, and it begins at 60,000. That's our key level of support. And the reason why this is our current key level of support, obviously we have our range low over here, but it is also the level that coincides with the midline of our macro descending channel structure here, that 59 to 60k region. Where falling below there, we can expect a bearish continuation on a daily time frame because we've fallen below the midline, but also on the short time frame because we've fallen below that corresponding level of horizontal support. So that gives us some confidence for price action moving forward. So in order to see a bullish continuation, so a bullish reversal here, and send the price back upwards and potentially prevent a continually red October, we need to see the price close above this level of resistance over here. So that ends at $64,000 and has buy side liquidity up here at 64.5. So in closing above buy side liquidity specifically, we can expect a bullish continuation up to this next level of significance over here at 65.7 to $66,000. And again, we have it mapped out from the prior structure that we had here on the short time frame, being our key weekly downtrend, right? Where in closing above the prior high in the downtrend, we expect a range continuation to the range high of that, short time frame structure. So that is the exact same level that we have over here. If we zoom in a little bit further onto a 30-minute chart, we can see that Bitcoin's forming some sort of descending wedge pattern over here. So potentially in breaking out of this and clearing above the prior high here, we can expect another retest of that level of resistance on the short time frame. And we have RSI confirmation or RSI confluence. So in breaking above that, it could be leading indication of a potential breakout. But either way, guys, the really key thing that we need here is just a break of this upper level of resistance. Until we manage to do that, Bitcoin does not look particularly good. We're not going to be able to flip that weekly candle back to being green and potentially reverse the monthly trajectory. Now, in terms of bearish continuation, currently our key level of support is the midline of our relevant trading range, right? This horizontal range that we have over here. This blue dotted trend line represents our key level of support. We can see it starts back here on the 5th of October. And in losing this level is where we can expect a range low retest. And that range low retest is a massive level of support, guys, right? If we zoom out a little bit on that 1 hour chart, we can see, or maybe if we went on to a 4 hour chart, it might be a little bit better, but you guys can see how it has acted as a really, really key level of resistance in the past. And conversely, the base of that range at 59k has again acted as a strong level of support as well. Even in this range low retest over here in that downtrend, that prior week downtrend, this was where we bottomed out. So massive level of support. It is also the midline of our macro descending channel structure, but in falling below that, that is when we can expect a more high time frame bearish continuation. And again, on the weekly chart is when we can potentially expect those moves to retest that leading span A here on the weekly time frame. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to BitUnext to get 15% off all of your trading fees. I'll catch you guys in the next one. Bye.